Hey guys, so we're doing a Bitcoin technical analysis video today, and I've just had to record this video again as my microphone wasn't working, so hopefully it's working now. And we're going to be talking about this falling wedge that we have. We broke out of it just previously in the video on the last one I was doing. As you can see, Bitcoin usually fills the entire wedge, or 70 to 90% of it, or any pattern that it has before breaking out. And we basically had no more room left. The range was getting very tight, and we have broken out of it right now on the 4-hour time frame. As you can see, we have 2 hours left until we close this outside the wedge or inside, who knows. We're in the golden pocket. The bulls are still holding us in the golden pocket, but it could easily break through here. We've had a lot of touches here, so I'd say it could easily break through right now. I'm not longing right here because it would be way too risky. Obviously, we're breaking down out of it. We've got a lot of support, as we've talked about in the previous videos. Even here, we've got a lot of support in the 8K range and the 8.2K range. So we're going to be looking to long at around 8,050 to 8,200. We're going to be laddering the longs and see how that plays out. I think it's a great risk to reward that we could have on this potential big bounce that we have. I'm not expecting a very, very big bounce. I'm expecting at least a couple $100. Right above us is a lot of resistance. These dotted lines are actually the 21 EMA on the daily. This is an indicator I use, so that's the 21 EMA on the daily, and if you watched the past few videos you would have seen that there was a lot of resistance above on the daily in the high time frames. We'll go on to those later on in the video though. So basically on the 30-minute time frame, what I want to show you guys, we got a little bit of bullish divergence that confirmed right here a few hours ago, and we were able to pick up more shorts at that spot actually. So from this peak to this peak we had bullish divergence, and we were able to load up on more shorts to actually close a little bit down here. I'm happy to start closing at around 8,200. We expected this move down, so that is pretty good for that. And as you can see on the lower time frame, we've actually closed outside of this wedge obviously. Let's see if on the 1 hour we've closed outside. Yes, we have actually closed the 1 hour as well, so we'll see how that plays out. Here we had some divergence as well, which happened a few hours ago on the 4-hour time frame. Momentum to downside is still dying. As you can see, these peaks are lower, or high, sorry. So momentum to the downside is dying. So we could potentially play a pretty nice bounce, even if we were to fake out of this and break out and close below it on the 4-hour time frame as well. There's still a potential very, very nice bounce that we could have. And we'll be looking at some stuff on the high time frames that I wanted to show you guys. On the 1 day, if you look here on the 1 day, we had, I'll delete this quickly. On the 1 day, we had a bearish cross on the MACD right here. At around right here, we had a bearish cross, and we dumped from 9,000, let's say even 200 or 9,100, and we've dumped to where we are now at around 8,350 or 8,300. So that's been a pretty good dump. That's usually a pretty big bearish signal. Bots sell on that, and people sell on that too. We've ticked down on the histogram here. On the 2-day, what I want to show you guys is pretty interesting here. On the MACD, we have this that's about to tick down actually. So as you can see, momentum to the upside has been dying for a while now, and we've slowly been leveling down, and we're about to tick down and go into the bearish territory on the MACD. And the actual moving averages on the MACD are about to cross as well, cross bearish. So if that does cross, that's pretty bearish. On the 2-day, it's very, very accurate, the MACD. If we look at spots like this right here, when we had our bearish cross, if you can see right here, we had a bearish cross, and then what happened here, we had a pretty big dump from the high, we'll say 13,200 to 9,700. Then we had a little fake out on the MACD, and we came right back down, and to the low that we made, that was at around 7,300. So if you backtest the MACD, you'll see that it is pretty basically accurate on these high time frames, especially the 2-day. So I do like the 2-day, especially this is very bearish to me. If it's ticking down like this, very, very bearish. But as I said, it may not happen. If the bulls come in here, it may not happen, and we could have a very, very nice push up. But I'd only expect a few $100. I wouldn't expect too much of it because it is still very bearish. I want to show you guys on the high time frames. We'll get rid of all these. So on the 1 week, which I really love using, if you see we'll add another EMA. I wanted to show you guys. We talked about this in yesterday's video, so if you haven't watched that, definitely go ahead and watch it, because we're not going to be getting into a lot of the things that we did talk about in yesterday's video, as I just wanted to keep this short, little update for you guys so you don't make the wrong decisions in your trades. So right here we closed on, so I'm on BLX right now, but on all major exchanges and on CMEs we closed below this 21 EMA, which is very important. We actually had a very solid close for the bears below this. We talked about it in yesterday's video. Every time we go above this 21 EMA, we have a mini bull run, or we have pushes up. And usually in a bull run, we retrace back to it. And we talked about this yesterday, and I showed you guys examples. But in a bull run, we usually retrace back to the 21 EMA and we push up. We only have a few wicks down. We never close below the 21 EMA ever. If you check, if you back test this, you'll see. And we talked about it in yesterday's video. But in a bear market, usually in bearish territory, you come down, and as you can see, we've come down from our mini bull run that we had. We came down and we've basically closed under it for a few weeks. We've faked out the top with the huge pump that we had. We closed 2 weeks above it, and we had a reversal candle, and we've come back down and closed below it. So this is exactly, I won't show you all the examples we talked about in yesterday's video, but as you can see, this is exactly what happens in these other, if you back test it, this is exactly what happens. So we come up and we fake out, and then the bulls can't hold us, and we go straight back down and close under, and then we continue downwards, and then we come up, we basically close one candle or a few candles above, and the bulls simply can't do it, and we get pushed back down. So, and then we have continuation to the downside, and as you can see, that's when we went to $3,000, and we had some pretty big we had a pretty big bear market, and we have 3 consecutive lower highs on the weekly, and the last time that happened was in the bear market that we had basically here. We have 3 consecutive lower highs with high lows, so it is looking very bearish. But as we know, like every time we get too comfortable shorting Bitcoin, we have a pretty big push up. On the lower time frames, as we've talked about in the past few videos, we've had basically momentum to downside dying for a while now, so we should see a pretty good push up, at least a few $100s. So we'll be looking for the $8,000 to $8,200 range. We're not going to be aiming for anything more. One thing I wanted to show you guys also is the 200 MA and the 100 MA. We'll just check if that's exactly what it is. So on BLX, it hasn't crossed yet, but it's about to. But on Coinbase and Bybit and other exchanges, it's basically already crossed. So the 200 MA and the 100 MA, this is when the 100 MA, or the lower moving average, drops below the higher moving average. It's called a bearish cross, and we're about to get that. As you can see, if we do stay below these levels in the next few hours, we'll actually get the cross, and tomorrow on the daily close, it'll be when we can actually confirm this cross. So let's see what happens. Just like the 2-day MACD, we could push up and go above, and this would cancel this out, at least for the time being. But as long as we're below the 200 EMA and the 50 MA, and we still have bearish action, we're going to have continuation to the downside, and these are 100% going to get confirmed. And we also talked about the 10 MA and the 21 EMA that have already crossed 2 days ago, and they confirmed. So it's looking very bearish on, and when it's looking like this, it's only right to be bearish. You can't just keep trying to long this and then keep dropping down. If you tried to long here, even though we were below the 21 EMA, you'd just be sitting through this entire move down. As we've been talking about in the last few videos, if you've been watching here, you probably wouldn't have tried to long this from 8,900, or even from these high targets that we were talking about. Bitcoin is going to fall, and it's been falling since then. So we've just got to be careful. This isn't, I don't like the look of this falling wedge. This isn't a falling wedge to me. Everyone's been talking about a falling wedge. Obviously, it's just looking way too bearish. You don't usually have a huge push up like this and then move back down. As you can see here, we just keep pushing up above the 21 EMA and keep coming back down. This is bearish controlled territory, basically. If we keep faking out above these MAs or EMAs, we're just going to keep going down, and we're going to have continuation to the downside. So continuation to the downside would make sense right now. And as you can see, we talked about this in yesterday's video as well. This trend line that we had on the weekly RSI, we actually got rejected off. So we have a few touches there actually. So that's a valid pattern on the RSI, and we've been rejected off it, and we've come back down. As you can see, that tick right here, it's come back down. So we failed to also create a high as well on this bull run, or this mini bull run that we had to 10,500. we failed to create any highs. Even here, we failed to create any highs. So basically, it's still looking bearish. And we, as I said, we have 3 consecutive lower highs on lows. Sorry, on the high time frames as well, on the weekly. So it's just looking very, very bearish. If you go ahead and backtest this 21 EMA, you'll see what I mean. It's not looking very good for the bulls, but we'll see how it plays out. So go and check out last week's video, or yesterday's video as well, and from last week's videos as well, and so you can get a better idea on this stuff. As you can see, we're still getting pushed down. So we have 1 hour and 49 minutes until this 4-hour close. So let's see what happens there. If we do come down, I'm going to be looking to long this. I'll quickly wrap this up right now, but I'll show you guys this, why I'm looking to long this 8K range. If we go here, as you can see, there's a lot of confluence here in this 8K range. So 8,000 to 8,200 will go all the way down here. There's a lot of support and there's a lot of resistance that we got to get through, or that it could end up being resistance as well. So right here, if we keep going back down to previous price action, you'll see that we've got a lot of confluence there. All over the board, we've got a lot of confluence. So just look out for that. And as you can see right here as well, in this 8K range, 8,200 to 8,000, we'll keep going back down. We've got more confluence here. So there's a lot of confluence in this range, and it could end up being a very, very nice play. And risk to reward for this long would be pretty nice. So it's very worth it putting this trade in. So yeah, I do think that you guys should definitely think about it at least. But yeah, so that's all I had to say about today's video. We're still bouncing on this 618. Let's see if we lose it or not. I think we have bounced way too much on this to be able to actually hold. I think it's going to end up breaking. So we're going to be aiming for this range. Right now, I don't have any upside targets. There's a lot of overhead resistance, so it's going to have to be decided at the time of it happening. We're not going to be able to know how much it's going to push or the bulls are really going to come in or not. But I do think we're going to end up getting rejected at those 9K levels especially. So look for that. If we do have a huge push up, look for the 9K ranges to be able to probably short. But right now we're looking for this long. And if you're already in a short, then keep writing it down and put your stop losses in profit. So thanks for watching, and I'll catch you guys in the next video.